So meaning of accounting equation. We have done in the before chapter we have done that assets, liabilities and capital. Liabilities and capital. Do you remember the first, second chapter of the book we have done? The basic accounting terms chapter we have done, where we have learned about assets, liabilities and capital. So, accounting equation is like a mathematical equation where it shows that assets is equal to liabilities plus capital. Means the total of the assets is equals to the total of liabilities plus capital. You must all be remembering the equations you have done in class 10th. You have to solve it like this only. Assets, you have to put all the assets together and the total of all the assets should be equal to the liabilities and capital. Okay. Next you should know about assets. What do we mean by assets? Assets are cash, bank, stock, furniture. The assets are those for which we do not buy for resale. Okay. Some goods are for resale and some goods are not for resale. Some the goods which are not for the things with assets which we bought for resale are known as stock, and debtors, that comes under debtors, the things which can be converted into cash within 1 year. But there are some assets which we bring for further production or for investment purposes, like furniture, building, machinery, computers. These all comes under assets. Now, whenever the assets will be coming in the business, as you can see here, this is a business. If the assets will come in the business, you will add back the assets, and if the assets are going out of the business, then it will get less. Am I clear to everyone? When the assets will come in the business, you will plus it, and if the assets will go out of the business, it will get minus. Next is liabilities. Liabilities are the udhar, you can say in Hindi udhar. The liabilities are the money which we have to still pay. So for example, creditors, outstanding expenses, bank loan, unearned income, etc. So whenever the liabilities are getting increased, it will get add, and whenever the liabilities will get decreased, it will get subtract. For example, if you have paid loan is a liability, so if you will pay loan, it is going out of the business, the loan is going to be short, now it is going to be repaid, so it will get minus. And if you will get some loan, if you will take some loan from a business, it will increase your liability, then it will get add. Whenever you will increase your liability, increase your loans or anything which you have to give, it will get add, and whenever you repay it, it will get less. Another thing is capital. Capital. Now when will the capital will increase and when it will get decrease? First point is here is introduction of capital. As you can see over here, introduction of capital means whenever the owner invest money in the business, whenever you will start a business and invest money in that, that is known as capital. So it will increase the capital. Okay, so it will get add. Now if you are having any profit, income or revenue, when will you get profit? Suppose you are having some goods which you have sold at profit, then that profit will be added back to the capital. If you have received some rent, some interest, some commission, whenever you receive something, it counts under income, and incomes are getting added in the capital account. Revenue means when you sell the goods and you give and you got the cash for that, that comes under revenue. So whenever any profit, income or revenue is coming in the business, then it will be added in the capital. Now the examples are sales, commission received, rent received, dividend received, discount received, interest received. These all comes under income. Now, what will get decreased? What will get subtracted? All the drawings. Drawings means whatever you withdraw business from the business for personal use, that comes under drawing, so it will get decreased. If there is any expenses, if you have paid rent, you have paid wages, you have paid salaries, you have paid commission, depreciation, discount allowed, all the expenses and losses, it will get decreased. Am I clear to everyone? Are you okay with this today? Now another thing I have shown over here, what we will do in capital, what all will get add. Sorry, this one is wrong one. Now there is a word clear. Clear means C means capital, L means liability, E means expenses and losses, A means assets, and R means revenue, income, and profit. Now, in this chapter, we will just remember this word clear, and we will do all the questions by this word only, clear word. You have to just learn this word. C means capital, L means liability, E means expenses and losses, A means assets, R means revenue, income, and profit. Now, this is the format of accounting equation. This is how we will going to prepare an accounting equation. This is a format. So, in the first column, what you will do, you will write serial number over there. After that, you will write all the transactions. Like the first transaction introduced business in the cash business in the capital. Then you will write over there. After this, we will do assets is equals to liabilities plus capital. I must tell you that always you will make big column for assets and short columns for liabilities and capital, because assets are more than liabilities and capital in the question. So this is the format. You can see it. Now the process of accounting equation. How will we do the question? The step 1 will be analyze the transaction to ascertain to which variable of accounting equation it affects by using clear. We have just learned one word, clear. So now what you will do? First you will analyze the transaction according to the word clear. Suppose there is one example over there. Furniture purchased for cash rupees 10,000. Okay. Now what we will do? First we will take the transaction, like what are the two accounts which are getting affected over here. We are purchasing furniture for cash. Now there are two accounts which are getting affected over here. What are they? Furniture and cash. Now what are they? Is there by using the word clear we can make it clear. C means capital. Obviously, furniture is not a capital on us as we have purchased it on in cash. L means liability. It is not a liability. E means expenses. No, it is not our expenses. Furniture, asset. As a furniture is an asset for us. Same way, cash is also an asset for us. Then in this transaction, both the things comes under asset. In step 2, what you will do, you will decide the effect of transaction on components of accounting equation. Means then you will see whether the asset, liability or capital, whatever it is there, whatever we have uh, analyze in the first step, we will see that whether it is getting increase or decrease. I have given you an example: furniture purchase for cash rupees 10,000. In that there were both were assets. We were purchasing furniture, so furniture is coming in the business, asset is coming in the business, so it will increase our assets. Increase in assets means plus, and the cash is going out of the business, so we will subtract it from cash. So asset was subtracting and is getting added and subtracted both, so the answer will comes to be 0. Step 3, finally record the effect on accounting equation in monetary terms. When you have seen that what we have to do, we have to plus it or you have to minus it. Another thing what we will do is we will finally record it in the accounting equation. You have to just see that after every transaction you have to see whether the accounting equation is getting balanced or not. Means the total of assets should be equal to liabilities and capital. I hope till here I am clear to everyone. This is in short, we can see over here. If there is any introduction of capital, you will add it. If there will be any profit in the business, you will add it. If there is any increase in assets, you will add it. Increase in liabilities, you will add it. If there is any drawings, you will subtract. If there is loss, you will subtract. If there is decrease in assets, you will subtract it. If there is decrease in liability, you will subtract it. So this is the gist of this chapter, that what are the things will going to be added and what are the things will going to be subtracted over here. Okay, now let's do it from here only. Assets is equals to liabilities plus capital.